Everyone, this is Ageless. All right, tonight's topic is chart patterns, as you can see on chapter 4. So, chart patterns. So, the ones that we've studied earlier on in our previous classes, which talked about trend analysis, support and resistance, then what and other candle patterns like pin bar, inverted pin bar, then bullish engulfing, bearish engulfing, tweezer tops and tweezer bottoms. They are very important. So when you spot all of that in your chart, you should be able to take a trade either for a buy or for a sell. So now we are also continuing with our lecture with chart patterns. Okay, so chart patterns are actually the patterns that when you see them in the market, you should be able to tell that this price is going in this direction or in the other direction. So I will appreciate it if you kindly go through your training guides and read up all of these tests because they are very important for you to grasp and understand. So these are the few chart patterns that has been listed on this training guide, but it is not all of the chart patterns that you'll be paying attention to, but I will spot out some few ones, understand, the important ones, just like the way we filter out those our candles stick patterns, the important ones like the engulfing, then the tweezer and the pin bars. And don't forget, I told you that dojis are pin bars. Okay, so now for chart patterns, the first one, please, I will appreciate it if you put your phone on auto rotate so that you can view it properly. Now the first one is head and shoulders pattern, and this pattern is very important. Whenever you spot head and shoulder pattern in the market, just jump on it and ride it. This is very important. Then we have inverted head and shoulder. This is just the opposite of head and shoulder. You get to see them in the chart later on. So this number 2 is important. So number 3 is also very important. Number 4 is important. Number 5 is important. Number 6 is important. Then 7 and 8 you can just neglect them. But this 1 to 6, then and 9 to 10, they are very, very, very important. So they are sure patterns in the market that when you see them, it's going to make you lot of money. So now we are going to start with head and shoulder. Now, how do you trade with head and shoulder, or how do you recognize head and shoulder when they appear on your chart? Head and shoulder is actually a reversal pattern. You understand? It's actually a bullish reversal pattern. It actually appears at the top of a trend. You understand? So now look at it. Let's give Now this is a typical example of head and shoulder. Look at what happens. Can you see that we had an uptrend? It was what? A bullish trend before. So it eventually retraced up and down, up. It now formed one head and two shoulders, just like human being. The head is higher and we have what? Two shoulders. What this implies is that price was actually trending. You understand? It was actually trending. When it got here, it made a retracement. Then it now went up again. Now it now made a retracement the third time. No, so it is actually expected of price to go up and what, take out this high, to go up beyond this head, but there was now a failure. It couldn't go beyond. Can you see? Um there was a lesser pressure from the buying participants. You understand? From the bulls. Okay, so there was a lesser pressure. They couldn't push price higher, so when it got there, it fell. So when you notice this kind of pattern, so you just have to jump on it. You understand? So now let me just explain to you what this head and shoulder implies. So now let's go to my note. Okay, I think I have it on, I think I've saved it on my phone. Okay, now this is it. Can you see? This is head and shoulder. This arrow indicates or signifies that the trend was actually bullish initially, right? So it now formed this high, came down, it formed the what? The head, it came down. It's actually meant to what? Continue upward to take out this high and continue, but there was what? The buying pressure was not enough, sufficient enough to take this second shoulder upward. So it now fell. You get it? So that's why we have head and shoulders, two shoulders. So when you see this pattern in the market, just make sure that you should be ready to sell. Now, how do you now sell this particular pattern? Now let's go back to our note, so to explain to you how to sell the particular chart. Now look at it. So now we have this. Now it fell, right? Now this line, this support line, you already know what support is. You will draw your support line across the neck. This is called the neck of the what? Of the head and shoulder. Look at it. This part, you just draw your what? Your neckline. The moment the neckline is broken, that is, the support line is broken, you understand, there will always be a retracement upward to what? To the what? Support line again. Now this support line is broken. When there's a retracement up to it, it becomes, the support line here become resistance, you understand. So that is where you should be looking out for your what? Entry, for your sell. Okay, now look at it. It broke the support line, right? Then it retraced back a bit. Now the moment it retraced back to this line, then you should be looking out for what? For a pin bar. Thank God you already know your candlesticks. Look out for a pin bar, or you look out for engulfing, bearish engulfing candle, or you look out for what? For tweezers. All right, you see that? You see how important those candlesticks that we've learned, see how important they are. So those are the candles that you'll be using to trade. So now look at it. There is a pin bar, right? This candle is a pin bar. The moment there is a close of that pin bar, then you jump into the market. See, there's a pin bar here. So from this pin bar, the moment there's a close, then you jump into it. You understand? You enter your trade here. That's why they say trade entering. This is where you enter here after the close of the pin bar. Then your risk, that means that I'm talking about your stop loss now. Where do you now place your stop loss? You place your stop loss on the high of this second shoulder. Look at it. See your risk. Can you see where risk is? So if you trace it to this shoulder, you see that it is exactly on this high. So there is no way that price will return back to come to this high and take you out. That's why where you place your stop loss in the market matters a lot, a whole lot, because if not, you will end up losing money. If you just place your stop loss somewhere around there, price can still just retrace back and bounce you out. Then you will lose some amount of money. So that's why you place it on this high of this shoulder, because price will not come back to break this shoulder upward. So because price is actually meant to go down, to what? To trade down. So the moment you place your entry, then you place your stop loss on the high of the second shoulder, then you target your 1 to 2. You target your 1 to 2. Can you see how far price went? You target your 1 to 2. And funny enough, head and shoulder pattern does not trade that much. It doesn't trade too far, because it only trades based on the length of this head to the neck of the what? Of the pattern. So what do I mean by that? Now let's go to our notes. Now let's look at this. This is it. You see this, the length of this head to the shoulder. This is a representation of what? Of this rectangle. That is the length. You understand? So when price keeps going, the moment it gets to that same length, if from here to here is 20 meter, then from here you measure 20 meter from the what? From the point of entry, which is the neck, to this part, 20 meter. That is how far the price can move before it retraces. So that's why you don't just have to place your take profit far. No, it's not. Or better still, you just target your 1 to 2. This video is getting too long. Let me save it so that you can watch it. All right, thank you, Ageless.